Ladies and gentlemen, welcome back to the channel. AMC stock is actually in the green today. This is great news considering IWM is not doing all too great. It's down about 1.5%. Yields are going higher today. We do have a couple different reasons why stocks are falling today. We'll get into that and we'll talk what's going on with AMC stock. So let's go ahead and get into it. Hit that like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comment section. So first things first, I want to maybe acknowledge the obvious for some people. Some people this might not be obvious information to, but if a stock reports earnings later in the week like AMC does on Wednesday, and you see an outperformance like we're seeing today, or that we could see over the next couple of days, it's highly supportive of good earnings to come. Now, that's not a guarantee. That's just what I've noticed over the years. If a stock outperforms heading into earnings, they tend to have good earnings. If a stock underperforms heading into earnings, they tend to have bad earnings. That's, I would imagine, because somebody already knows what the report's going to look like. That's not financial advice. That's not a recommendation to buy, sell, trade, anything. Contact financial advisor if you guys would like. That's just personally what I've noticed. Now, the markets are actually falling quite a bit today. Now, why are the markets falling quite a bit? Well, for one, you could say some deep job cuts are maybe to blame from Citigroup, potentially looking at laying off 10% of their staff when a bank is talking about laying off about 25,000 plus workers. That's not exactly great news, especially a big bank like Citigroup. It really makes you wonder what's going on under the surface. Now, the second thing that I can point to that is not exactly the greatest news for stocks, JP Morgan says the stock market rally is not sustainable. JP Morgan says, quote, "We believe that equities will soon revert back to an unattractive risk reward into year end," the analyst wrote in a note to clients. As the Fed is set to remain higher for longer at the short end, markets could start to price in a policy mistake, leading to lower long yields down the line. And that might not ultimately be helpful for stocks, especially if 2024 earnings projections start to reset lower, the analyst added. It says JP Morgan's stance on technology and mining sectors is neutral. They recommend overweight positions in energy, insurance, telecom sectors, while underweighting banking, capital goods, excluding aerospace and defense, chemicals, construction, retail, and automotive sectors. Quote, "We believe seasonals are typically supportive at this time of the year, and the likely peak in bond yields is a short-term help, but this might not lead to a sustained bounce," the analyst concluded. So basically saying this is short-lived, and the markets are going to realize these other factors, like maybe heading into a recession, a policy error from the Fed, things of that nature, and those are just never good for stocks. So that is obviously not great as well. We heard from the Fed today, Fed Cook, and she was actually pretty bullish. She said some things that were a little on the hawkish side, but overall, I would say was pretty bullish. You could make the argument that today markets are just giving back a little bit of the rally that we have already seen. If you look at IWM, you have been green, what, 5 days in a row already? 1, 2, 3, 4, 5 heading into today. Today would have been the 6th green day in a row. So you found some resistance at that 50-day moving average. You fell down a little bit. Not a big deal in the grand scope of things. I do think, the markets are going to be tactically bullish here heading into the end of the year, or heading into a situation where we start to go into a recession or something along those lines. So I firmly think you don't want to be short here. You don't want to be, all in on puts or anything, or really, have too many puts at all. That's my personal opinion. That's not a recommendation. That's not financial advice. That's just what I'm doing. But heading into 2024, at some point in 2024, yeah, you probably want to have some downside protection. Now, again, with AMC stock, I would argue and I would imagine the reason AMC stock is doing well today is because of possibly good earnings to come. That's maybe what we're seeing going on here. Now, AMC stock is finding resistance at the same place you found resistance on Friday. If you break out above here over the next coming days, that's going to be great news. And I think a really good earnings report could send you into the 20s, whereas even a decent earnings could send you into the high teens. AMC is at $11 per share, so that could be quite the upside from here, if I were to imagine. Now, let's take a look at AMC's numbers. Option activity, first things first. You have seen 2 orders totaling $135,260,000 with a positive order value of 100%. So pretty exciting there. If you look at the volume expiring by this Friday, you have volume of 73.45% calls and 26.46% puts. The open interest sitting at about 69% calls and about 31% puts. So pretty bullish just across the board with option activity. And again, that puts call ratio at 0.66 really allows AMC stock, in my personal opinion, to make that upside move from here. Whereas when you add a puts call ratio of like 3 times as many puts to calls from January through September of 2023, you were unable to make a big move higher. Every time we would try to, there was so many puts, there was so many shorts, you just really couldn't go anywhere. That was the big problem. Now, if you take a look at these numbers, you got to take them with a big grain of salt. I'm not a financial advisor, I'm not a financial planner, but I think a lot of you guys would agree these numbers are probably not correct. You have a short interest of free float at 6.54%, $138.64 million worth of short positions, days to cover at 0.62, 12.93 million shares that are currently sold short, shares out on loan 15.57 million, cost to borrow 1.32, utilization of 35.91, and a short score of 51.98. Again, you got to take those numbers with a grain of salt because I don't think really any of them are accurate, including the cost to borrow fees. Cost to borrow max sitting at about 6%, cost to borrow average, cost to borrow minimum less than 1%. Give me a break, especially since AMC stock has started to make its way higher now. There is no way that you're going to take on a short position for 1%, in my personal opinion. That would just be a stupid idea for any market maker that is letting you, or just prime broker that is letting you take out a short position. That's insane. Just my personal opinion. Now, if you're looking at this Friday's option numbers, you have calls in the money of 15,000, calls out the money 52,342, puts in the money 2,300, puts out the money about 29,000. So you are seeing a lot more calls in the money than puts in the money, and you are seeing about double the amount of calls out the money compared to puts out the money. So there is a lot of option activity, especially on the call side relative to that put side. That is a pretty good reason to be excited here. Now, again, the big reason why stocks are really falling today is the rise again in your 10-year treasury yields. 10-year treasury yields up 9.5 basis points. Something we need to be watching for as investors in this market is to see what some of these bond auctions do today. Well, not necessarily today, but over the rest of this week. We did have some bond auctions today, 3-month bond auction, 6-month bond auction. That's where a lot of the selling did get, pretty extreme. If you see bad bond auctions throughout the rest of this week, or really at any point, it's not going to be a great thing for stocks. And surprisingly, you actually seen bond yields fall a little bit during this auction. So that's not really making sense to why yields are going so much higher today. Maybe it's just a snapback, but nonetheless, 10-year treasury yields being up almost 10 basis points today is going to have a negative impact on our markets. Last but not least, we do have some earnings today and after hours tomorrow, pre-market. Realty Income, Hims and Hers, NXP, Vertex, Diamondback Energy, Clover, Coterra, TripAdvisor, Fibrogen, and Salines, all today and after hours. You have Uber, Celsius, Datadog, DR Horton, Melco, ACM Research, Vertex, and Emerson Huh, that's actually my son's name. That's interesting. Reporting earnings tomorrow in pre-market. So AMC stock is Wednesday and after hours. We do have some time here. I don't have a trade yet on AMC. If I do put out a trade and you guys want to be notified when I do or if I do, or make trades on really anything else, check out that link down below in the description of this video. Come join us, come sign up, come be a part of the community. Nonetheless, that is going to do it for this video. Thank you for watching. Enjoy the rest of your day, and I will see you in the next one.